Hello and welcome to Calmvestor podcast. I am Ethan. Join me on this journey to build solid financial thinking and take control of your financial future. Have you ever noticed how often major financial mistakes seem to stem from our emotions rather than logic? Especially when powerful feelings like fear and greed take the driver's seat. Imagine an investor. Let's call him Alex. The market takes a sharp dive and Alex, gripped by panic, sells all his stocks, locking in a heavy loss. This is fear in action. Now consider Sarah. She sees a particular stock soaring, fueled by hype. The fear of missing out, or FOMO, kicks in. She invests all her savings at the peak, just before it tumbles. That's greed, or rather, the fear of not getting enough. It's surprising, but studies show that many individual investors often underperform the general market. A significant reason for this is decisions driven by these very emotions. Have you ever felt your heart race or your palms sweat when making a big financial decision? Or that restless urge to jump on a golden opportunity everyone's talking about? Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." This highlights how counterintuitive, yet powerful, managing these emotions can be. Think about events like the 2008 financial crisis. Many sold off assets in panic. Conversely, during speculative bubbles, many rush in, ignoring risks, driven by the allure of quick profits. Today, we'll explore these two powerful forces, fear and greed, and how they interact with what Nobel laureate Daniel Kahneman calls System 1 thinking. Fear and greed, as Buffett sees them, are the primary emotions that often dictate the behavior of the crowd in financial markets. They are powerful motivators. Fear can lead to panic selling, exiting the market when prices are low, and thus missing the chance to buy valuable assets at a discount. It whispers danger. Get out now. Greed, on the other hand, can lead to chasing high-flying stocks, buying at inflated prices, and taking on excessive risk for unrealistic expected returns. It shouts, "Don't miss out." Now, let's connect this to Daniel Kahneman's System 1 thinking from his book, Thinking Fast and Slow. System 1 is our fast, intuitive, emotional, and automatic way of thinking. System 1 operates almost effortlessly, relying on simple rules, personal experiences, and cognitive biases. It's fantastic for everyday tasks, like driving a familiar route. However, this intuitive system can be a pitfall in complex situations like financial decision-making, where quick judgments can lead to errors. So how do they interact? Fear and greed are often the immediate, potent reactions of System 1 when faced with market uncertainty and volatility. Deciding to buy when prices are skyrocketing, driven by greed, or selling when prices plummet, driven by fear, are typically System 1 responses. Buffett also noted, "What we learn from history is that people don't learn from history." This points to the repetitive, emotional mistakes driven by our System 1. Kahneman says System 1 is excellent at creating a coherent story from scattered information, which can lead to hasty conclusions in investing. For example, when the market is down and negative news is everywhere, System 1 quickly flags danger, urging an immediate sell to preserve capital. That's fear taking over. Conversely, when a hot stock is praised on social media, System 1 rapidly creates a once-in-a-lifetime opportunity feeling, pushing for an immediate buy. That's greed, amplified by social proof. This combination of fear, greed, and System 1 thinking often leads to common financial blunders, causing losses and hindering long-term success. It's a challenging mix. One of the most common is buying at the peak and selling at the bottom, essentially following the herd. Buying when the market is euphoric, greed, and selling when it panics, fear. Then there's confirmation bias. System 1 tends to seek and interpret information that confirms our existing beliefs. If you're feeling greedy, you'll notice all the good news. The herding effect is also powerful. The fear of being left out or doing something different from the crowd makes us susceptible to group behavior, even if it's irrational. Overconfidence bias can creep in after a few small successes. System 1 might convince you that you can predict the market, leading to riskier decisions. And of course, FOMO, the fear of missing out. This is a strong manifestation of greed triggered by System 1 when we see others profiting. As Benjamin Graham, Buffett's mentor, said, "The investor's chief problem, and even his worst enemy, is likely to be himself." This really hits home, doesn't it? Why are we so susceptible to these influences in our financial decisions? Part of it is our biological programming. Our brains evolved to react quickly to threats, fear for survival, and seize opportunities, greed for resources. The financial market itself, with its volatility, uncertainty, and constant flow of information, creates an ideal environment for System 1 and emotions to take over. Lack of solid financial knowledge and a clear investment plan also leaves investors vulnerable to emotional swings and market noise. So what can we do? How can we manage these powerful forces? The first step is to recognize and name the emotions and biases of System 1. Cultivate the habit of asking yourself, What am I feeling right now? Fear or greed? Is this decision based on analysis or a momentary feeling? Keeping a trading journal that includes your emotions at the time of a decision can help you identify your own patterns of unhelpful behavior. Next, we need to actively engage System 2 thinking, our slower, more logical, analytical mind. This involves building a deliberate decision-making process. Create an investment checklist. Before buying or selling, answer preset questions. Why am I doing this? What are the risks? Does it fit my long-term plan? What do the fundamentals say? Implement a sleep-on-it rule for significant decisions. Give your system time to analyze. Rather than acting immediately under emotional pressure, actively seek out counter-arguments. Read analyses and opinions that challenge your current thinking to gain a more balanced perspective. Building discipline and a long-term investment plan is crucial. Clearly define your financial goals, risk tolerance, and investment horizon. The more specific your plan, the less likely you are to be swayed by emotions. Stick to your strategy, even when the market is volatile, assuming it's built on solid foundations. Consider automating your investments through strategies like dollar-cost averaging, DCA. Investing a fixed amount regularly helps remove emotional timing from the equation. Warren Buffett emphasized, we don't have to be smarter than the rest. We have to be more disciplined than the rest. Discipline is a learnable skill. Benjamin Graham also wisely said that the best way to measure your investment success is not by beating the market, but by having a sound financial plan and sticking to it. Imagine an investor faced with a hot stock. Instead of impulsive buying, System 1, they pull out their checklist, examining fundamentals and risks. System 2, this is empowered decision-making. Mastering your emotions and your thinking isn't easy, but it's a vital skill for achieving sustainable financial success and peace of mind in investing. Remember, fear, greed, and System 1 are natural parts of being human. We can't eliminate them, but we can learn to manage their influence on our decisions. Developing discipline and critical thinking, System 2, is an ongoing journey. It requires patience, self-awareness, and a commitment to continuous learning. Why not start with small steps? This week, when you face a financial choice, pause and ask, is this System 1 or System 2 talking? Consider reading more about behavioral finance, perhaps Kahneman's thinking, Fast and Slow, or Buffett's letters to shareholders. Knowledge is empowering. By understanding yourself and how your mind works, you can become a wiser, calmer, and ultimately more successful investor. It's within your reach. Thanks for listening. If you found this content valuable, don't forget to hit like and subscribe to the channel. See you in the next episode. Have an amazing day filled with positive energy.